Probably the longest intro I've ever had in my life. with the trap music, I was trying to get some new blokes in the room, so trying to get the youngsters on the call as well.
I can't help
Anthony,
you with that.
very nice to have you here. Very nice to have you here. It's an absolute pleasure. I've been looking forward to this for a while, in all fairness, and I obviously know that you're like an expert at this, so slightly freaked out about this particular session, but nonetheless, we move forward. I really appreciate the time. I know you're a busy man. And I'll give you a little bit of a quick intro from my side. Everybody knows you as the king of LinkedIn. Everybody knows you're the brains behind VeChain and many others when it comes to marketing and business, which is absolutely always amazing. And I'm very, very, very glad to have you here to help me kick off this manual series. A little bit of a funny story. When I told my wife what the story or the series was going to be, I said it's the manual series. She was like, "Oh, not again, not again. Why do you keep naming everything after your name and your surname? This is becoming ridiculous." Anyway, here we are. So I'll leave it at that. How are you? And how are you doing?
Well, I mean, first thing, congratulations for even having the courage to start your own show. I think very many people in our industry and in and around tech, business, wherever they are, have excellent ideas, incredible charisma, but for whatever reason, don't feel comfortable or confident to step out and to share their ideas with others. You're doing that, and that's worth congratulating in and of itself. Right? You can always improve the editing, you can always improve the format, you can always improve the guests.
Yeah.
But if you don't take the first step, then you're already lost. So huge congrats to you for getting it started. I mean, in terms of naming stuff, you only get one shot at that, unfortunately. So fortunately, you didn't call it something daft like blockchain won't save the world, which felt like a brilliant idea
No.
when I
love that
first
one.
named my show. But now I have to write long form blockchain won't save the world every time that I type the name of my show. And it's like, this is quite long and annoying, albeit I still hold it's a title that I love. But it became logistically complicated as opposed to anything else. So listen, if it's the manual series, it's the manual series, and let's go create a manual.
I also saw you at the Paris Blockchain Week on a bull, if I'm not mistaken, or at least one of the picks.
Yeah, that was the latest in my series of dad jokes, which was "Let's effing escargot," which is a play on French eating snails and being in Paris. Not great. But it came to me in the moment. I was like, I wonder if AI could create a picture of me riding on a giant snail through Paris Blockchain Week. And for those who are listening in and have absolutely no idea what we're talking about, jump into my LinkedIn, go onto the thread, look back about a week and a half, and you'll find a picture of me riding a giant snail. That having been said, Paris Blockchain Week was interesting. I'm not going to go as far as to say it was incredible. I think, generally speaking, from the number of Patagonia gilets, you can sense that the institutions are here. I think for the better, generally speaking. Paris, as always, was beautiful, albeit hectic, full of armed police, smells of cigarettes and urine, but is not a bad place to host an event. And got to obviously catch up with some good friends, people in the industry, get a sense of where they think they're going. What the hell are blockchains that aren't Solana or Ethereum going to do in 2026? And a number of people, including Eric Bassini, CEO at Hedera, talking about his path to building primitives or useful revenue-generating sources for their ecosystem. Obviously, Hedera's got a sort of significant number of enterprise validators and partners, so they don't need a huge amount of extra encouragement to get into that space, but a very professional conversation. Spoke to John Woods, who's now CEO at Nillion, a privacy project that I think has got some really interesting tech, and on his journey. Also seeing his fancy red Louboutin stage shoes. I'm pretty sure he's never worn them outside of that conference, given the lack of scratches on the bottom of his shoes, but that was fun. And also seeing Silvio Micali speaking about the concept of a cryptoless blockchain verification process, as in taking the risk out of economic security, or taking the risk out of having to need crypto specifically for validators. Was interesting as a concept. Exactly where his fiat chain concept goes, let's wait and see. But some interesting shoots of conversations. The rest actually was a little underwhelming. And whether you like it or not, when institutions or people focus on institutions speak about Web3 and tokenization of assets and TradFi, they rarely ever sound compelling. And so you end up with this slightly unfortunate mix of crypto people explaining crypto for the 5,000th time to an audience that already gets it, and financiers putting the audience to sleep because they don't know how to speak compellingly about the things that they build or that they do, or how life is going to change based on what they do. So there is still a huge narrative gap for the institutional side of crypto. There's a big revenue gap for the other side, which
Hmm.
doesn't exactly what it wants to be when it grows up. So lots to do.
You can see it on this side of the world in South Africa as well. That's where the conversation's going. Regulators are having conversations. Banks are having conversations. They're the ones rocking up at the doors nowadays. And it is becoming a different space altogether. And we can see that socially as well. Everything's, the conversations have changed. The interests have changed. So different worlds, really. Have you come to that realization that the space that we're in is completely different, and the world is changing, and this isn't the hype cycle anymore? It's actually the real deal, that this is where you want to be developing and growing?
So about 2016, I think, was the realization. I spent and the reality is it's taken that long for the rest of the world to catch up, or at least for
Mm.
meaningful change and adoption of a new technology paradigm, if you want to use a wanky word like paradigm. If you want a new paradigm to bed in and reach mainstream adoption outside of little niche pockets of early adopters. I think the biggest challenge with any technology, cloud has been on a 25-year journey for adoption. A couple of years ago, IBM said only 30% of enterprise workflows had actually gone cloud-based, which for technology we now assume is ubiquitous, is like, wow, that's really not much. I thought everybody was using the cloud, and the cloud is like, if you're not using cloud, what are you doing, bro? Type of story. Web3, blockchains, and crypto are always going to be slightly different to that, but it remains as infrastructure. So it's taken the guts of 10 years for the financial institutions to go beyond, 24/7 markets that are open, global, and programmatic feel like a good thing, but that's deeply scary for us. First thing, we're going to fight against it and say, well, we don't want to be disrupted too quickly. We want to figure out how we get on with it. Then we'll do a bunch of pilots and tests for a couple of years and figure out, is this actually real? Is this legitimate? Then we'll take positions, and whether that be for the infrastructure or for crypto as a financial instrument or digital asset. I mean, the answer is both, but I think it's important to draw the distinction between those two things. The industry we work in has the digital asset investment side, which is tokenized stocks or cryptos as equivalents to tokenized stocks. You buy them with the expectation of a return. You have blockchains, which are or is technology infrastructure on which you can build applications or entire businesses, like 24/7 stock trading or 24/7 banking, or the idea of a digital dollar that can cross borders without having to go through lots of correspondent banks very slowly and expensively. That's useful. And then you have some additional ideas like blockchain as a source of the truth, smart contracts as a means to deploy application infrastructure at very low cost that is persistent, and the idea of having tokens as exchanges of value. Things that, when we get onto it, the primitives that VeChain has built and the way that VeChain has been able to interact with enterprises, individuals, and application builders shows that it is absolutely possible to get into mainstream use. It has just taken this long. And so the reason I'm still in Web3 and the reason I got into Web3 in 2016 with Deloitte was this is a deeply interesting and expansive area for innovation using technology. But digital transformation has taken 10 years to catch up. And so I'm not going anywhere else. There's still a huge amount of work to do here. And the emergence of the agentic web has not changed things. It's not slowed things down. It's going to accelerate a lot. And that gives us another domain in which to play. So long rambling answer,
Yeah.
but I think that's probably a short summary of the last 10 years in Web3.
Yeah. Yeah. I mean, I think about myself. I mean, I was on last week Friday, in a conversation with a whole bunch of regulators, and there were a few banks, and we were having this conversation where we were trying to wrap our heads around, what are we doing? What are the regulators doing wrong from their side? Why are they not adopting blockchain and the consideration of blockchain as quickly as they should? Why are there 3 million projects busy building at this moment in time and developing amazing tools and mechanisms for kind of the normie on the ground and on the street to utilize financial products and tools and actually do it at a cheaper rate and much more efficiently, and to be able to access their money and actually have more at the end of the day. And they're having these conversations, and the same thing comes up every single time. It's blockchain is had 10 years to find itself. It has found itself. The technology has been improved. It's great. But you've got these regulators that are completely stuck in this old mindset. They're just not moving forward. They're not considering the technology. They're not considering how to approach it and to work with it. And then I think to myself, we're in the state right now in 2026 when Claude bots arrived and all the other AI agents have arrived on the scene. That's going to move much faster than blockchain has moved, or it has already, in all fairness. And you've got all these different mechanisms of technology and product right now that's just expanding and growing so quickly. And they indirectly, they're working very well together. We're in the space where we need to find ways to work together, make it seamless, make it more efficient, and then move forward from that point onwards. So then, if you think about AI agents and you think about all these different mechanisms that have come into play right now, if you think about when AI actually handles execution and manages that whole process in every sense of the word, what's that human skill that you think you really, really need to hold on to in this current world, because everything is just running so fast. And there's a scenario that if you don't keep on to some of these skills, everything's going to be lost at the end of the day.
Yeah, I think no regulator has any obligation to regulate anything until it becomes either at the cusp of adoption or an existential threat or an existential risk to the system they're regulating. So I would say 90% of regulators come from a defensive stance. I think that's changing, and you're seeing more nations treat their regulators as a gateway to innovation because it's an economic imperative or because it's critical for their differentiation. Take Singapore, Hong Kong, for example, not nations with large amounts of national resources, shall we say, or commodities or physical resources, small native populations. So innovation in technology, innovation in finance are critical. So the role of the regulator there is to move as quickly as possible domestically as you can to be able to be at the forefront of innovation to capture the early value, because you have to. You look at China, Russia, United States, very different balance of power. Even the UK, up to a certain point, the FCA, because the UK is familiar to me to some extent. Portugal, at the other end of the spectrum where I live, the UK has migrated more towards a sandboxing, proactive, innovative FCA, Financial Conduct Authority. Portugal, last time I checked, doesn't have a designated authority for registering digital assets and white papers. Still. So, yes, there is a financial regulator and so on and so forth, but with MiCA regulation, there's a requirement to have somebody who you mail your white paper to if you choose to. If you want to have your white paper for tokenomics reviewed under MiCA. And I don't think we have one. That's okay. Honestly, we'll be all right. Portugal will muddle along. We always have. But that's there is disparity in and around regulators and how regulators act. Final thought on this one is no technology has any divine right to adoption. Right? Just because you're new and there's a bunch of people who've poured a bunch of money into it doesn't mean that you have a right to be used or replace existing infrastructure. If you're not better, if people aren't advocating for you, and if you don't see a reason for there to be a framework around your adoption from a sufficient body of industry, you're not going to get an audience. And so whether that's South Africa or Southern African nations or Europe, unless the lobbying parties or those parties interested in seeing regulators act and take notice, pay attention, are more than just these sort of young degen guys and cyberpunks who think that we should replace the traditional financial system, which is not a great
Yeah.
opening gambit, if I'm honest. You want to have a little bit more bipartisan or industry-wide support if you expect things to move faster. And so having a bunch of hoodies in a room talking about how great Bitcoin is all well and good. And seeing the inflows and actually seeing the activity in your nation around how many people own wallets or how many people participate in investing in cryptocurrencies. Again, that is a space where digital assets and crypto tax becomes very important very quickly. Blockchain as infrastructure for 24/7 markets in South Africa, materially different structural and regulatory challenge, and will be much slower and harder because it requires a lot more digital transformation.
Yeah, there's a stat out that says about 43% of South Africans actually have dabbled in crypto in some form or another already, which is interesting.
And
So there's a lot of
43.5% have all
activity
been rug
happening.
pulled and have gone out.
Pretty much. I didn't want to put that one on screen, but 100% actually.
You're the only one
It's
left.
a crazy time. I'm the only one. We actually had in one of our chat groups, we had a bloke that came through and said, "I am ready," because Ethereum obviously dipped a bit today, and he said, "I am ready to buy some Ethereum today." And he asked, "What exchange should I buy this on?" And four of the crypto gen, hoodie blokes responded. Every single one of their responses were different. Every single one of their approaches were different. Every single one of them said buy at different times. And I think that's one of the issues we have right now. There's just so many different scenarios and ways you could approach this particular space. And regulatory wise, they need to find some type of a framework that supports, the guy that's trying to get in and understand how this works and obviously try and protect his assets at the same time. So
Again, shows the dichotomy between people
yeah,
investing in crypto as pseudo stocks versus
yeah,
adoption of blockchain infrastructure for applications, right? Typically speaking,
yeah,
when you get to that pivotal moment where you get mass adoption, distribution is essential. And download X wallet and go to Crypto Monkey Exchange or DeFi Panda and swap your Ethereum for wrapped Bitcoin and then swap your wrapped Bitcoin for wrapped Binance and then turn your Binance into fart coin and then eventually you'll arbitrage into it's like, guys, this is not how most people buy investment products. They buy investment products either from fintech apps that have incredible UX or from their financial institutions because there's a bank or a basis of trust that sits behind what they're doing. On the other side, using crypto for other applications, you got to build applications that are useful that need blockchain underneath them. If we're still not there domestically in South Africa or any nation, we haven't fixed the distribution channels yet. And expecting Web3 fintech to capture the imagination and provide a better UX is a long shot.
yeah, it is. Talking about that particular point. So you personally, this place is a roller coaster. So one day you're an absolute star and you're like a genius because you've made so much money, and the next day you're in speculation land and everybody and everything is failing all around you. So how do you, when all of this noise becomes so loud and all the chaos is everywhere, how do you keep yourself grounded in this particular space?
I remember that my job in this industry is this part over here, which is building applications and not worrying about
Mm.
people speculatively buying and selling assets based on narratives or threats or macroeconomical this, that, and the other. I have always worked for companies that have a P&L. I've always worked for companies that have a business plan, a strategy, and a roadmap to deliver and execute on it, because I think that's what endures. Over the course of time, the technology changes, the pace of change modifies, the skill sets that you need change. But one of the main reasons I joined VeChain is it has a track record as an ecosystem of generating adoption from the organizations that we need. So the earliest adoption was large enterprises looking at data verification, anti-fraud, supply chain type use cases where they understand that actually a trusted shared record is really important for some things such
Mm.
as cross-border trade, verification of quality standards, a bunch of places where you have anti-counterfeiting. There's a number of geographies where some countries you see more counterfeit products than others. Being able to have you and a 2, 3, 4, 5 tier supply chain on a shared database that nobody owns or that nobody is responsible for makes sense. Joint venture accounting, again, in oil and gas, a space where no one can hold the record, no one can manipulate the record. You've got a single source of truth. That's not necessarily game changing. That doesn't transform the whole industry, but does take out some pain points in certain places. And this was at the very, very start of the use of blockchain. In terms of any meaningful adoption, VeChain was at the forefront. Last couple of years with VBeta, they've demonstrated that 5 million users will sign up to use everyday apps they can download on their iPhone that makes sense to use crypto and blockchain primitives. Digital identity, verification, proof of data, rewards for activities in the real world in crypto. We've proved that that is something that 5 million people will sign up for. And we need to extend that out then into the same audience that first were interested in blockchain and saw VeChain as a credible partner, because we understand how enterprise tech gets adopted. Sunny was a CIO at a major fashion brand. Antonio and I have been working with enterprises our entire careers. We're not here talking about crypto and trust me, bro, and the decentralized future. We're saying objectively, this is how we make a business case for you using everyday fan engagement. This is how verifiable data mixed with AI can increase your impact every day. Right? Real engagement, actual humans doing real things as opposed to scrolling and looking at stuff on social media. There's a case behind all of these things, and it's super, super clear. So when I wake up in the morning and hear about DeFi hack X, quantum resistant Y, rug pull over here, Trump launches a meme coin there, the 75th derivative of a perpetual DEX, or the 9th version of some different flavored prediction market has just been launched. I know that those are red oceans and that everybody is going to be clamoring to spend money on marketing to try and make their copy of everybody else's idea grow faster or better. The reality is we're over here in the blue ocean building technology that people have and will continue to adopt. And I sleep fairly well at night knowing that.
That is exactly how I look at it as well. I mean, I've obviously met the team, worked with the VeChain team. I understand how smart and how considerate they are with regards to their tech and their technology and their approaches to this particular space, and what they're trying to build in this particular space. But then again, I look at some of the community members, and many of them are looking at these 24-hour charts. That's their life. That's all they're there for. They're bought in early. Everything feels good, and then everything goes south. And how do you from your side and VeChain side, how do you manage and keep the community excited about these things? You obviously have some amazing things that have launched recently in the roadmap. You've consistently been developing and rolling out and pushing great updates and supporting the community in every sense of the word. But how else can you support these community members that are struggling, if you want to put it in inverted commas, really struggling to keep up?
That's the CMO's dilemma, right? Between who are your stakeholders? And the interesting thing about Web3 is actually your shareholders are manifold. Your shareholders are the team you work with. Your shareholders are the applications that build on your platform or with your technology. The institutions that invest or make use of your applications, or customers and partners such as Walmart, BMW, Lululemon. You also have application users, right? So whether you like it or not, you're the platform on which certain applications were built. Any of those on VBeta, people can come back and say, well, VeChain was part of the VBeta ecosystem, even if the application had nothing to do with us. You're still in the ecosystem. And so you have a duty of care to make sure that you're helping to support and communicate and be there for users of applications effectively. And then you have people who hold your token. And so there's a whole bunch of different points of view on whether token holders are actual shareholders. They are still stakeholders to me in the grand scheme of things. And I think you've got a few different responsibilities. Thing one is to set reasonable expectations. If you tell your community that you're going to build something and it's going to be launched in 10 seconds and it's going to get 1 billion users, misrepresenting your ecosystem in exchange for any sort of artificial inflation in demand for your token is unlikely to be successful long term. So part of how you message, what is your vision? What is VeChain here to do? We're here for mass adoption of Web3 across businesses, individuals, and agents, right? Companies, actions, agents. That's what we're here to build. And the roadmap lays that out. We're here for building pragmatic infrastructure and solutions that everyday applications can be built on. We're not chasing use cases that may come to fruition one day. We're not trying to build decentralized infrastructure that has a particularly niche use case. We're trying to do that right mix of great technology, decentralization, and real adoption, which is hard, right? Whether you like it or not, being Salesforce or being SAP is a much easier go-to-market story with systems integrators or with direct Salesforce than decentralized infrastructure. You're always going to have to work harder on BD than that. And so, when you hear members of the community kind of chipping in saying, "Oh well, just insist that Dana White puts VeChain technology behind every single ticket in the UFC, and then you've got mass adoption." That's a suggestion that would absolutely increase the number of on-chain transactions. Would that be beneficial to the UFC audience? Would Dana see a valuable use case in us doing that? Would Web3 and would tokenization of tickets to the UFC provide any more meaningful experience for the user relative to the cost of replatforming, assurance, technical transformation, and all of the other stuff that would go into making that happen? The business case on that would suck because that's not the right place to be using the technology right now. And so you constantly got to communicate your vision, what you see, what you learn. I think Sunny does a good job of being out there. I do my best to be out there as much as I can. Antonio, the same. Present and show what it is we've built. Help people understand that we are not a pump and dump project. We're not here to get a quick buck. We're in this for the long term in terms of adoption. And we've seen 3, maybe 4 bear markets already as VeChain, and we're still here building. We've still got great applications in our ecosystem that people love to use every day. And every time I tell somebody about VBeta, saying, well, look, you can reward millions of humans around the planet every day for doing something for your business. And you don't have to, that value can move at the speed of the internet, and you can create meaningful engagement with your fans every day in the physical world. Guys are like, wow, that's really cool. How do we do that? It's like, well, you can build an app there. How much does it cost? Well, nothing. You can launch an application there yourself, and you can apply for funding from the treasury. Oh, that's quite cool. Why is nobody else doing that? I was like, well, let me tell you about crypto. So there's no secret recipe for this. I think honesty is important. I think setting expectations is important. Being as transparent as you can, up to a point of not losing your competitive advantage around what it is that you're doing, showcasing success, and just continuing to not overhype what you've done. And that's quite rare in Web3. Honestly, there's not many teams that would go out with that ethos. And so, that's one of the main reasons why I'm still here.
Yeah. I mean, and education is such a big part of all of this. I mean, we can have conversations and try and, onboard individuals into the different ecosystems that exist, or projects or developers, whatever that looks like. But there's a part where we need to continually we need to educate them. We're upgrading our tech, we're upgrading our protocols and our projects every single month, I would say. And with that, you need to re-educate and educate throughout all these different phases, so that individuals can understand what they're walking into. They can feel comfortable, feel safe, and obviously move forward in that particular space, knowing they can actually benefit from these tools and these capabilities. There's so much, and like you said, we're very early in essence, so there's a lot that still needs to happen to unlock these conversations with a whole bunch of different types of individuals.
Yeah, for sure.
I want to jump into...
I would say that at this point in time, better blockchains is probably not what anybody needs. Yes, there's going to be always going to be an ongoing progression of improvements made to any technology, right? X updates its app every day. How many of you actually go through the bug notes or the patch notes of what they've actually built? Probably one curious person out of 100. But the rest of you is like, yeah, cool. I like X because it's an application where I get to do whatever it is that I like to do when I get there. Look at Elon putting up pictures of kawaii girls, or follow sports news, or yell angrily at people on the internet because I don't like what they do, or whatever it is. Get your news, get your unfiltered media from X. This point, I think you're unlikely to impress or excite anybody with a better blockchain than any other blockchains that have gone before. We have enough block space. We have more than enough cryptocurrencies. People kind of poke fun at Web3 because I think we got up to something like 42 million tokens launched on different platforms. I'd say that's still a low number. Since the advent or the democratization of the internet, how many web pages have been launched? Maybe I'll do a quick Google of that one right now, but I'm pretty sure in 96, 97, at least 10 to 100,000 this is my cat websites appeared. And how many of those websites are still here? Right? Because they were expensive to maintain. Nobody went on them, and it was just people messing around with the internet because it's a thing and it's new and they get to play around with it. Saying that 42,000 token-based projects or token-based initiatives lived and died shows experimentation. I think that should be celebrated up to a point. Now, if people invested and lost money in those stories, well, that's sad, and that is not something we should be encouraging. But at least we've shown that the democratization of creating projects in this space is working. And going forward, we can't necessarily say, well, this token is better than the previous token because X, Y, and Z. This is a business. This is what it's going to do. This is where it's going to disrupt. This is the value that it provides. It has a token because we agree that having some sort of value mechanism or some sort of incentive system or economic security is important to us, or this is a better way for us to fundraise versus getting or giving equity to venture capital. These are tools we get to use because they exist now and they've been relatively proven. Ultimately, you've still got to convince somebody that there's actually revenue or a business behind it, or you have created just another token idea with a paper that's not really going to get anywhere meaningful anytime soon. We have to realize that we're at that point in the history of Web3 now, and the same still applies to any 10, 8, 7, 5-year-old layer ones and layer twos that are out there too. The same rules apply to you.
I'm just going to make a little bit of a note right now that says, don't create another cat token. There's more than enough out there in every sense of the word. Well, I think there is more than enough out there. For 2026 roadmap, I saw some very cool slides and very cool information on those particular slides. I'm going to pop one up on the screen, and then we can maybe just talk through a bit of those insights. I'm not a tech developer, so just FYI, if you're going to go through the nitty-gritty of the code right now, I'm sending it off to some agentic agent to explain it to me at some particular point. So let's dive into a few. Let me know if you can see that screen. Okay, there it is. It's popping up.
I can. And let me do the short version for humans who want to understand why, not what. Again, in Web3, we've spent the last 10 years explaining to people how clever we are, or what incredible decentralized technology, or what particular smart contract language, or what particular version of cryptography or elliptical curves we're using that make it better than the next best thing. Honestly speaking, we need to be talking about, well, why are we building these features and what does that enable? How are we empowering better applications, or how do we end up growing more because of the stuff that we've built? And so this is the patch notes, right? This is going to matter for developers. This is going to matter for people building apps in the VeChain ecosystem. This is going to matter for DeFi and digital asset players who want to look at VeChain and VeChain's ecosystem, or those who are already building with us, right? So we'll get to some of that. But these are just Interstellar's main features that allow us to do more applications and extend into more spaces. Let me give you the background music to the overall why here is that VeChain is the technology that is designed to work for applications built for companies, actions, and agents. What do I mean by that? Companies, large organizations who want reliable, predictable, sustainable, and easy to use technologies underpinning the apps they build. That was VeChain's 101. That was the first thing we tried to make, is that we making use of blockchain easy. And so a lot of the technology, the SDKs, and what sits underneath VeChain is there. And we spent a lot of the last year upgrading some of those features. And again, some of that was more towards decentralization in terms of the moving from proof of authority to proof of stake. And some of this will be more just about pure functionality. So VeChain is an EVM chain. So we continue to try and keep pace and expand at the speed of the Ethereum ecosystem. So some of the upgrades you'll see are really just getting to EVM equivalents, or kind of full Ethereum equivalents, so that people who are already used to building in and around Ethereum, in and around Solidity smart contracts or Ethereum-based applications can come and build here. Super simple. This is to keep pace with the state of the art and to remain addressable to the widest range of application builders we can. Fairly straightforward. JSON RPC, again, is really just about getting to technical equivalents of the way that we build for the Ethereum developer stack. Hardhat, Foundry, MetaMask, Ether.js, all making that work natively with VeChain Thor. Right. Transaction finality, the faster we can get to finality, we're going to make some tweaks and some improvements there, which will allow for faster processing, faster finality. Again, all good incremental improvements at any blockchain. Validators, we already saw over 100 validators come in as a result of Hayabusa last year. Validators are those who help support the security and the validation of blocks on the blockchain. So already fairly well decentralized, significant amount of VET staked with validators. This is already a great start. We're going to continue to make it easier for larger amounts of capital, larger amounts of validator stake to come into our ecosystem. So at the moment, it's capped, I think, at about 25 million VET per validator. That cap is going to expand or disappear. So you're going to start seeing larger amounts of capital, larger players making a play for validation of VeChain blocks, which, again, what you want at the start is you want it to be easy. You want an open playing field. We are now going to apply maybe a little bit more market dynamics around validation on VeChain, which ultimately is better for security, attracts the larger players and the institutions that we know are there, which generally speaking should be good for a competitive validator ecosystem in VeChain. And then finally, on-chain attestation, critical primitive for RWAs. So we've already got digital assets, businesses looking at VeChain and building on VeChain in terms of being able to use our platform as the underpinning infrastructure for tokenization of things. I'll keep it broad for now until we have the final press release as we come out. But again, this is building readiness or extending the tools and capabilities that builders can have for deploying real-world asset use cases, tokenization of things use cases on VeChain. I hope I didn't get too technical. I hope I kept the why at a suitable level for technical and non-technical humans. But ultimately, that's the core of what Interstellar is going to be for 2026. Lots in there, lots of it common sense, lots of it good incremental development, but also some other stuff coming as well, which is super exciting.
I wanted to kind of note or comment on one of your points there. You said things are coming. There's like maybe 3 people watching this at the moment. You don't have to hide about that. You can share what's coming in the RWA space. I mean, it's not that bad.
Yeah, I'm as a marketing director, as a CMO, I will get my ass kicked for leaking alpha before the time that we have well scheduled the time when those things get announced, Warren. So you know yourself that I will never ever allow real alpha to leak out. So let me abstract this again, because going line by line of the tech we're building starts off on the wrong foot. Agents are now a new audience. Right? Remember when I went through all of the different stakeholders? You went through, the application users, application builders, institutions, token holders, your own team, et cetera, et cetera. Agents are now stakeholders in your ecosystem, whether you like it or not. Whether that's because they are being given instruction by their human actor, which could be any one of those previous audiences that I talked about. It could be a trading bot, could be a application development bot, could be vibe coding, could be Partnerships could be anything, right? I mean, professional partnerships as opposed to relationship partnerships. Go follow,
Understood.
go follow Sue Ennis on LinkedIn, formerly of Hut8, if you want to learn more about the AI robotic partner economy. Exciting space. But coming back to our world, the agents are now stakeholders. They are there to be addressed. They will build applications. They will accumulate capital, and they will execute instructions. Now, what I said earlier is that VeChain is going to be, or remains, the ecosystem for companies, actions, and agents. So the one thing that an agent cannot do is act in the real world. They can act in the physical world, in the digital world. They can act on cryptocurrencies, they can act on trading, they can act on information, they can pass data. But there is no Claude bot today that can walk out into the high street and recycle a plastic bottle, or that could walk out into the middle of nowhere and take a selfie with a geolocation tracker, right? And unless they have a physical body associated with it, and we're getting into robotics now, but for the time being, broadly speaking, AIs are headless. They are agents that act on behalf of either themselves, their community, or their human actor, or the business that hires them. We want to enable agents to interact in every sphere of the world. So that is in the digital space, that is in the physical space. And so a big part of enabling that is, okay, we want to make sure we've got the right primitives for vibe coding and agents that build applications to build on VeChain. Trusted infrastructure with established partners with a 5 million user base. That's already puts us in the top, X% of where could I go and build my application on which blockchain. The VBetter ecosystem has already proven concept for creating applications, verifying transactions, and rewarding people anywhere in the world in real time in a currency or a digital currency that has value. That is a hugely powerful tool for any AI agent that requires human activity. No other Web3 ecosystem has that. And so agents will know that or learn that very quickly. If you're an AI agent, if you put this into the command prompt and you say, as an agent, where can I co-opt human actors in exchange for value? You will say something like Craigslist, or so you can go post on Craigslist and deal with a banking system, or you can build an application on VBetter and go and do things at the speed of the internet. Right. So that is that is going to be a hugely powerful space. It's not somewhere we see anybody else competing at this point in time. Yes, we're seeing AI crypto trading bots. Yes, we're seeing digital money moving around by agents investing in Bitcoin, agents earning yield on Bitcoin. Sure, that's in the crypto side of the world. And agents doing crypto things and crypto investing will absolutely become a commoditized space. Everybody will have it. There'll be enough bridges and enough places that no one particular chain or no one particular application will have an unfair advantage. It'll be a race to the bottom of which is the most secure, most safe, fastest, highest yield returning solution for those agents. We don't want to be in that space necessarily. We're going to be part of it, whether we like it or not, because we're working with one chain and other bridges where VET and other cryptocurrencies and stables can move around and find themselves in VeChain. What I think is particularly unique to us at this point in time is our ability to co-opt individuals and have agents do so. And so everything you see here builds out towards that, right? So Model Context Protocol, MCP, being enabled to integrate that with VeChain Thor means that agents can now interact with the blockchain. And having a high-performance indexer that allows you to track information, to look at the source of the truth, matters significantly. Agents will need to know, did it happen? Was the action verified? Do I need to pay a reward? Or did the things is the history I'm being presented with correct? All super important. Identity, an essential primitive for these transactions. You need to know who are you interacting with? What is their history? What level of permissions will they give you to interact with their application, their wallet, their audience, etc.? You cannot do that without agent-ready identity. And then everything else sits behind that in terms of, again, the SDK to build, the Explorer, and the ability to put analytical packages together that agents can make use of, validate, verify. This is the framework. But the why, I take it back to companies, actions, agents. Right? Companies will use agents. Agents will act on their own behalf. Both companies and agents will want to co-opt individuals to do everyday actions. VBeta and VeChain is the place where that happens. And very quickly, we're going to see a rapid development and emergence of these sorts of applications. And as I said, we are the only guys doing this today.
Yeah, completely. I mean, I've run around and had a look at a whole bunch of different blockchains. There's nothing like this in the space. It's really innovative. This is also great. I mean, I was around when social logins were being discussed and all those good things were up and coming. You've made a lot of progress from this particular space, and you've obviously got this very, very fascinating number 6 that's there that says agent marketplace. So we're still sticking with the whole agent side of things. What does the marketplace look like? I mean, that sounds fascinating in every sense of the word. Is that, from my perspective, is that us being able to pick a few different types of agents, one that maybe manages specific payment requirements that we might have, or transactions we'd like to fulfill or complete or do, or trades? Is that the space that we're talking about? Or is this agent going out, having conversations with another trading partner that says, I can make you some profits over here, and let's do the following transaction right now on anonymously or autonomously rather?
Yeah, you're spot on. It's that and more, right? I mean, I think the term marketplace, people already have their own preconceptions of what a marketplace is and isn't. And the ability to build up
Yeah.
both the demand side and the supply side of a marketplace remains complicated for every marketplace that's ever been built. What we're saying here is that we want to enable agents and companies and individuals to interact together, right? So for those people who don't know, VWorld is the wallet, the gateway for digital assets, the single super app to engage with the whole VeChain ecosystem. So if you download the VWorld app, anybody who's listening to this who's like, well, how do I understand what's in VeChain? Go to vworld.com, download the VWorld app, and through there you can get to staking, you can get to VBeta apps, you can get to analytics, you can get to a whole bunch of different features that sort of consolidates down your VeChain experience. Now imagine in that space, you can have tasks, you can have agents that hold wallets, you can have companies that hold wallets, you can have individuals that are participating or have signed up to different applications that can be engaged and co-opted through the agents, right? It doesn't necessarily make sense to be too prescriptive around what the marketplace does and doesn't do, because the very point of this is that this is a place where companies, individuals, and agents coalesce. And so what you want that to be is a place where projects, bounties, actions, rewards are exchanged between those 3 actor types. And that all comes together through VWorld, because that's the place where your identity, your wallet, your assets, and your activity all come together. So that's why that's going to exist in and around VWorld.
Amazing. And is that a place where anybody can build an agent that can participate in the VWorld marketplace at any particular time? Or will that be managed from a VeChain perspective?
So there will be home-built bots. BMO will probably be one of those. And so you'll see some BMO features coming out. BMO's been around for a while, but BMO's got a new lease of life in this particular space. Obviously, the concept mirrors something a bit like Amazon, but the point is not to be too prescriptive over what it is and it isn't. What we're saying is we want agents to be able to create applications. We want humans and agents to interact. And if it's agents to agents, you may actually see that there is a direct agent to agent interaction that doesn't go through a marketplace per se, because it doesn't need to, right? Agents don't need a front end. They need the ability to connect, publish particular information, or be able to be clear that a certain task or certain bounty is available, and then co-opt other agents or other ecosystems to be able to get that done. So that to me is a place through which activity can coalesce. Whether all of it becomes posted on a front end UI like a billboard, or whether the marketplace allows agents to post activities, tasks, and outcomes as long as they follow the rules of VeChain's marketplace and the VBetter ecosystem. I think that's an important point, right? We do want to make sure that there are ethics and rules up to a certain point. The treasury for VBetter will have its own rules and its own requirements. So in that particular space, you don't want to go beyond what is community governed. You don't want to go beyond what's in the legal or ethical boundaries of what we want to see happen. We don't want to see a whole bunch of assassination contracts appear on VBetter, right? So we don't prove that you have killed the president. It's like, no, we do not want that here. So
definitely
as a
not.
result, you need to
Definitely
put some framework around what is and isn't possible, what can and can't be done, what should and shouldn't be funded. And so think of that in the loosest terms as marketplace.
Yeah, obviously credibility plays a big role in that particular space. And then if you just take VWorld as it is, would you say VWorld has or is becoming this particular place or this particular product where the tech is really disappearing, where blockchain is kind of indirectly also just becoming the underlying tech, and it's becoming the new logging into Netflix? It's as easy as that way of doing things.
Yeah, wallets have always been the interface, right? So a lot of value accrues to wallets. The closer you are to the customer decision and the store of value, the more you have an opportunity to grow your business model, to generate revenue. And again, like I said earlier, all layer ones, layer twos, and blockchain ecosystems need to find a source of revenue. That then becomes about how useful are you? How do you intermediate activity? And how do you earn revenue from that? So if you see the primitives that sit here, right? Social login and identity, custodial services, swaps, payment partner integrations, RWA platform integrations, these are all revenue generating services. How that surfaces to an individual B2C user, how that surfaces to a company, how that surfaces to an agent, how that surfaces to a tokenization provider or institutional custodian will all look a bit different. But VWorld as the coordinating infrastructure is where these things are going to coalesce, and with VeChain Thor as the blockchain infrastructure that sits underneath.
That's fantastic. All right. I mean, if we kind of went through all of these kind of blueprints regarding the wallet, if we want to zoom out and just look at where all of this is taking us, in your mind, if you look at VeChain as things stand, what's next? What's happening with all of these developments? What's the next goal? Big goal.
So the goal for VeChain has always been to demonstrate mass adoption of blockchain technologies. So whether that's going to be companies, whether that's going to be individuals doing actions, or whether that's going to be agents, that remains the mission. That's what we do every day, no matter what. So part of that is going to be, from a business development perspective, continuing to engage with organizations, companies, app builders to grow the demand side of the business, working with distribution channels and individuals to increase the supply side of that. So the humans who like the idea of doing something and earning reward every day. And then growing our familiarity with agents as stakeholders, right? There's not a single blockchain ecosystem that can say, hey, we're really good at bringing together companies, agents, and individuals on a regular basis. There's nobody doing that today, really, at scale.
Yeah.
And so us being able to learn, improve, and gradually increase functionality and features in those three spaces together, super, super important. So that's going to require moving both at the speed of agents, but at a level of risk that the community and our company and enterprise partners can stomach. Right. So what you don't want in a lot of these cases is to move fast and break stuff all the time. You're going to see lots of trials, lots of prototypes, lots of bounties, lots of new things coming up at a level of gradually improving and testing those primitives. And then, like you said, is how much space do you give the agent, or how much of control or how much trust do you give the agent, as much as those three parties are ready to take. So What's coming next for VeChain? It's kind of business as usual, just with agents as an additional level of stakeholder now.
I love that. That's brilliant. And if we think about this manual that I'm trying to create at some point or another, if you think about a closing line for this particular manual, what's that final instruction for people building in this kind of business and Web3 and AI space as things stand right now? What would you say is something that you'd like to let them all know when they start considering or diving into this Web3 and AI space?
So to the marketeers out there, I would say adoption is the best marketing. So if you've built something, demonstrate people who are willing to use it. Don't talk about how the technology works. Talk about how people are using it. Or even better, have those people talk about how they're using it. So a big part of technology that's getting adopted is demonstrate adoption. I think to those people who are building with Web3 technologies, thing one is make sure you've got a clear business case. That's always been the case with every technology. As long as you can understand how does it help, what does it do, how does it make things better, and ultimately make money for people, you're going to be onto a good thing. If you're saying, well, we can do it, but decentralized, and everyone turns around and says, oh, that sounds cool, but why? And you don't have a good answer, then chances are it's going to be hard for your business to succeed. If it's simply just about, well, we're going to launch a token, raise a bunch of money, and we'll figure it out along the way. In 2026, I don't think we can allow that level of breathing room between the intellectual concept and the business plan. 17, 16, we could probably get away with that because the path was less certain. We've had 10 years of doing this now. Get yourself a plan for adoption. Get yourself a plan for scaling. The nice thing about Web3 and crypto is things can move very quickly if you're working in a digital space and you're building something new. If you're expecting to work with legacy organizations like we've talked about, financial institutions, regulators, even FTSE 100 or Fortune 500 companies, assume it's going to be a 2-year journey before anything gets out there. And can you sustain that? Can you make that work? Agents will make things move faster. And so I guess the final thought here is don't forget that agents are stakeholders. You're building for them as research and discovery, application builders, and also customers now. So don't forget to add agents to your stakeholder map. And that's 3 different chapters of the manual for 3 different audiences, but I wouldn't be a CMO for audiences, right?
That's why I'm so blessed to have you as my first guest. I really am blessed, and I really appreciate your time. I know you're a very busy man, but thank you very much for taking the time to be here, and thank you for all the great insights. Really, really appreciate it.
Very happy to share. Congratulations again to you for getting this started. I look forward to reading the manual one day or asking my agent to summarize it and turn it into a podcast.
I think the second round is going to be the one. Have a great rest of the day.
You too.